Good morning, traders. Welcome to followmetrades.com Real Traders Club live session on Thursday, May 4th, 2023. And we're in the post-Fed era, for the short term anyway. Of course, the Federal Reserve had their meeting or their announcement yesterday and announced what they're doing for rate hikes. And I'm sure everybody here follow that. So quarter point hike and forward-looking comments were leaving the door open for more. Mr. Powell said, we gotta, we may pause, but they were asking about rate cuts, and it was way too early to start talking about rate cuts. They're going to continue to monitor indicators, progress on inflation and the key indicators, but the door is open for even more cuts. But they're slowing. They were doing 3/4 point increases, tapered it down to quarter point right this time. Doors open for more, maybe pause to zero, but certainly no cuts. And so I think there was some optimism built in that maybe got dashed a little bit. So the markets are down. Dow is down, call 3/4 point, 241 points, 0.72%, S&P 500 down 0.59%, NASDAQ down 0.5%. Here's the current headline: Dow drops 200 points. Bank contagion fears return. Traders assess Fed outlook. And, we're over halfway through the earnings season, but we got a big one today at the after the market closed. Anybody know who's reporting today? And, absolutely a market bellwether. Not only does it indicate the health of that individual company, but kind of consumer sentiment and all that kind of stuff. There it is. Russell, Jib, Apple after the close. So that'll be a big deal. So that's where we are. You see this guy's expression kind of, sums it up. What? Right. And again, there's still swirl around banks. I continue with the position based on data that there's not a systemic problem with banks. It's more an emotional response to a handful of banks with issues. But there it is, and it's persisting. At some point there will be a recovery in banking stocks. Try to participate in that. On a bright note, Ferrari jumped 24% as demand pushes waiting list ended 2025. So if you're thinking about ordering that new Ferrari, you're gonna have to get in line. Life is hard, right? Yeah, I can't take delivery on that new Ferrari this year. Dang it.
It'd give me a chance to win the lottery first.
There you go. All right, let's look at market movers, winners, losers. Should be interesting. Ball Corp, storage containers, canning jars, and the like. 12%. Solar Edge, solar coming back. Solar, the technology, the sector had gotten beaten down recently. Cognizant, Royal Caribbean up 6%. FleetCor, Vulcan Materials, Martin Marietta, Albemarle Energy, interesting. So oil is still down, getting beat up. All right, Paramount Global, I believe that's the theater chain, down 22%. Ouch. Fort Warner Machines, bank. Big drops there. That is the S&P 500. It's up over the NASDAQ. Interesting, Shiv. You can see his note there about TD had offered to purchase First Horizon. All right, on the NASDAQ, Datadog, 15%. Cognizant, Moderna, Baidu, JD, it'll come back. We had seen the Chinese stocks getting kind of beat down before. Oh, look, Zoom. I went to look at that chart. It had been a bottom feeder and part of the ARK fund. Atlassian, PDD, another Chinese company. Qualcomm, bam. Sirius, Marvel. All right. Let's look at Paramount is CBS streaming cost. Thank you. All right, let's look at oil. Oil is down again 68%. It's been a pretty big pullback. Look at the chart here. Start with the S&P 500. So you can see the reversal on the S&P 500 right at that prior high. And the last 3 days counting today, 3 trading days, down, down, down. We haven't gone below this low yet, so we're still technically in this uptrend of higher highs, higher lows, higher high, higher low, higher high, higher low, higher high in this particular trend right here. This is kind of important. See if it reverses before it gets down here, stays above the 50. And Apple, again, is a bellwether, an indicator of the overall economy, consumer sentiment, all those things probably play a role in the overall market here. So we'll see if this will continue up to new highs. Interesting. Let's look at oil. USO, we'll use the ETF. And it had looked like it was ready to head up, but as you can see, it is not heading up. It's had a pretty dramatic pullback here. Will it find support? Prior pivot here, support level here. See if it pulls back. So we have been looking at a handful of interesting trades and heavily weighted toward energy. We did not pull the trigger. We're waiting for a few things, and oh my goodness, good thing. So that's okay. Sometimes, in times of uncertainty, keep your powder dry. Better to not be in trades than to be in losing trades. So that's good. Let's look at Zoom for fun. It was on the leaders list today. Oh, look at this. Pretty good size move off the bottom. That it had consolidated down here. That's one price bar. That's not enough to get me in. And you can see the big picture on Zoom here. Down from, call it $600. That's a pretty big drop by any measure. So is it going to get better? We'll see. It could develop. Not even ready to put it on the watch list yet. We'll let this develop and keep checking back on it. And we had been watching MJ. That one was pretty interesting, a bottom feeder as well. We got a trigger, it's still sliding down, still a good setup if it goes up and triggers. So we'll keep watching that. And that's kind of it. We're on hold. I don't think we're ready yet for shifting to primarily short trades. We still do, like I said, on the S&P, have a technically definition of an uptrend until that's changed. So we grind it out and be patient and disciplined. That's the market overview. And we'll shift.